You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. It is time once again for the Futures Rundown, the program here on the network, where we dive deep into the tumultuous, the turbulent, the wild waters of the futures market, see what's lighting up our screen this week. My name, of course, Mark Longo from the Options Insider Radio Network, your source for all of your favorite options podcasts. Make sure you're listening to the full network. If you're not, you're missing out. Nearly a dozen other shows out there, including the sister show to this one, This Week in Futures Options. They go very much hand in hand. You should be listening to both. And of course, if you're not listening to the pro, theoptionsinsider.com/pro, you're missing out on that awesome panel I did last week with our good buddy Tony Saliba and a bunch of other special guests, looking back on the 50-plus year history of the options market, the 87 crash, all kinds of wild stuff on that. Our pro members have been enjoying that, as well as a lot of other great exclusives. Theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us on this edition of the Futures Rundown. I'm pleased to welcome back on, for the first time in a while, Mr. Brett Friedman, the managing partner over there at Winhall Risk Analytics, and of course, a contributor to OptionMetrics. Brett, welcome back to the Futures Rundown for the first time in the new year, sir.
Thank you for having me.
All right, with the team assembled, listeners, it is time to bravely enter the trading pits.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the trading pit, the portion of the show where we break down what's catching our eye and what's lighting up the tapes in the futures market this week. But Brett, before we get there, it's been since last September that we last talked to you on the show. So Q3 of last year is the last time we checked in with you. Obviously, a lot has gone on since then. And of course, this is your first appearance in the mad year of 2026. So let's start for a second looking back a little bit. As you look back on the wild year in futures, that was 2025, sir, what really stands out and resonates to you?
The same thing that's resonating today, quite honestly. Precious metals and industrial metals were the story in commodities last year, and their story so far this year. I haven't been on since September, but in early November was more or less the launch point from which silver, for lack of a better phrase, just went completely nuts. And we're still seeing it today. It's been accelerating. It's accelerated seriously the day after Christmas. It decided to go completely crazy. China announced some export restrictions, and it was more or less the excuse for this thing to go off to the races. Uh, Gold has been going up as well, but not nearly as much as silver. Silver is, I think, the story of Q3, Q4, and so far this year. For I haven't seen a commodity act like this in a long time, and I've lived through two silver crazinesses, and this one is, I think, the most intense I've seen.
Yeah, this is, I think, any adjective you want to put except for boring applies right now to silver. We have a good buddy on one of our other shows. He is the longest running silver bull that I know. He's been talking silver up for well over a decade on our network. And even he got out of the ride at the end of last year because they had a great year. And who would have thought that silver would be up much more, let alone up over a third just to start the new year. So, and even he says now it's a product solely for crazy people out there. So it is getting into some extreme air. Let's just get there now. Let's dive into the stuff that is lighting up our tape out here this week. I'll get to the upside and downside movers in a second, but let's start. You kind of gave away the lead really at the top there, Mr. Brett, which is silver is far and away the story of this market right now. I can't recall the last time we've had so many people interested in the metals. It's absolutely wild stuff. Last year, first half of last year, the story was all gold, all gold, all gold. It was gold making new highs seemingly every other day. The vol index, the fair gauge, the VIX wasn't really keeping pace with what gold was selling. So there was a lot of discussion about what is the true fair gauge for the market. There was also some side discussion about how come silver isn't playing ball as well. In fact, in the first half of last year, if you go back and look at some of the headlines, listeners, silver bulls were lamenting that silver was actually selling off while gold was rallying. It was not a good time to be a silver bull. Fast forward to the end of last year, let alone the beginning of this year, things are just completely off the chain. I know, Brett, we haven't talked to you in a while. Since that time, you've been busy crunching the numbers on all things silver. Why don't you break it down for our listeners? What the heck is going on in silver, sir?
Well, let's put this into context. I mean, in 2025, its upside performance was 8 times that of the S&P. 8. That's a pretty impressive number right there. You don't see that many financial instruments sort of up. So far this year, it's up about 60%. And what are we on, our 22nd or 23rd or something like that trading day? Not only that, its intraday moves, its daily returns are, over 5, 6, 7% on a daily basis, plus or minus, mostly plus, obviously. But that's in the top decile. I don't know how you say that. Decile. I don't know. Basically, of all moves since this thing's been trading. So to say that this is extreme is an understatement. Implied volatility, this stuff normally trades around 30. It's trading probably, I haven't checked the numbers this morning, but it's probably around 70%. Yesterday it went over triple digits. So, I mean, we're seeing some fairly serious stuff going on here. But we see, and the thing that quizzes me is that I just can't get my arm around is that the fundamentals that are being posited for this move have been present for a long time. Silver's been in supply deficit for years. And all the other stuff that it's needed for AI, it's needed for EVs, it has industrial applications. The dollar's going down, the debasement trade, blah 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 blah. All that's been present. All that was present before December 2025 was present for most of last year. So why all of a sudden has this commodity decided to almost triple in price? The only thing I can think of is that you were getting a ton of participation in this commodity of people that normally aren't participating. They're momentum traders. It's going up and it's the hot thing, so we're all going to get in. And I have some anecdotal evidence for that. I mean, I've gotten some phone calls from potential clients that are asking me about silver and should we be getting in, things like that. Most of them have no idea about precious metals. They're equity people, but they're getting attracted by the returns because they're return seeking. They're looking for yield. Uh, but again, the fundamentals are supportive, but they're not that supportive to say that this commodity, should double in price in 2 months. And that's the part that that I have problems for. I don't have a problem with a bull market. I have a problem with something that looks like it's inflating. And I have to admit that the conditions when, the obvious question is this a bubble? But one of the conditions of a bubble is that they're extremely hungry. They need constant feeding to keep going. And I would say that for silver bulls, they should have a statue of President Trump in their backyard, and they should be praying to it because he's the gift that keeps on giving. So every week it's something else, right or wrong. There was Venezuela, there's Iran, there's Fed independence. Today there's the constant thing about tariffs. So it just seems like, and this gets back to a theme of 2025. If you ask me, like, what are the three words that sum up what's been going on over the last like 6 to 9 months in commodities, it's uncertainty, uncertainty, and uncertainty. Every week seems to bring something new, and that adds to that opinion. Therefore, the bulls have a reason to buy every week. My opinion is eventually things are going to calm down and this will deflate somewhat. But in the meantime, back at the ranch, so now we have the prospect of a government shutdown, or more adding to the uncertainty opinion. All this stuff is bullish for precious metals, and when it will stop, I'm not sure. As I wrote last week, my first trading boss gave me a very good piece of advice, and that's don't step in front of a moving train. And this is a barreling freight train. Picking tops in something like this with over 100% volatility, you can get your face ripped off. I'm not willing to do that.
Yeah, you mentioned the vol. Obviously, this is the futures show, but the vol has certainly not gone unnoticed. Our pro listeners, a lot of our other listeners have pointed out, even those who don't particularly follow silver. And again, you should check out Brett's full report over there at OptionMetrics. You could see all this, including the visuals and indeed the vol levels that we're talking about here. As you point out, implied vol was 77% in silver, levels above 60%, only about 2.4% of the time, and they don't last very long. So some of our chat, even those who don't normally trade the metals, have been getting lured to the dark side a little bit by these vol levels, Mr. Brett. And the other thing you pointed out is something that I've been mulling over for a while too, because you're right, the fundamental scenario, call it what you will, for silver, EV demand, all these other actual physical drivers of value haven't changed materially in the last few months. In fact, you could argue some of them, like EV demand, have kind of been going the other way. So it has been kind of interesting to see people pointing towards that as the catalyst for this massive, call it what you will, bubble. In fact, Brett, back in the early days of the meme stock run, back in middle of 2001, there was an early attempt to try to do this. It did not succeed, but there was a lot of talk and a lot of interest from all of the YOLO meme stock crowd, Mr. Brett, saying maybe silver is the next target of a potential short squeeze. It never really materialized for a variety of reasons. Silver, a globally traded commodity, a little bit different than, let's say, a GameStop. But still, interesting prospect. It certainly raises some questions now, Brett. You think we're seeing a little bit of the squeeze action, or are we beyond that now? Who's left to be short this thing?
I don't think this is a giant. Well, I mean, the physical demand, the physical supply demand is tight. There's no question about it. There's some dislocation between London and New York that's driving the underlying. But again, it doesn't that that can't account for what's going on, for the magnitude of what's going on. I should say that this, for some of your listeners who haven't been trading that long, this has gone on before, only in miniature versions. The most impressive one was the 1978 to 1980 Hunt Brothers silver squeeze, which, I recognize was a million years ago, but as well, 2011, we had something similar. And for what most people don't realize is both of those were punctured by the exchange. The exchange basically said, we're raising margins to almost 50%. And we can and will prohibit any new long positions from entering the market. The ultimate function of the market of the COMEX or the NYMEX or what have you is to maintain an orderly market. If they feel that the market is just getting completely insane, they will raise margins to punitive levels and get people out. That a miniature version of that happened yesterday. Silver came off because they raised margin, I believe, from like 12% to like 13% or something like that, 13.5%. But these are miniature margin moves as it goes. When exchanges want to shut something like this down, they can. And that's probably, I'm not going to say it's going to happen, but that's historically, silver has a history of that happening. That's, you have no control over that.
Different era now, though. If you think about it, exchange is now for-profit public entities.
Right.
They're not very much in the business of turning away business anymore. In fact, as you mentioned here in your report, kind of the opposite. They recently announced some new silver products, trying to stoke that demand a little bit. So we might see the opposite, Brett. We might see them throwing some fuel on the fire. You're right. We saw not that long ago with the first Bitcoin run up, we saw them taking some draconian margin measures to try to drill down on that a little bit. So far, though, we're not seeing that. We're seeing, hey, here's more products for you kids to enjoy, Brett.
Yeah, I don't foresee that the exchange is going to do that. What's interesting, though, at sort of 100,000 foot level, is what's missing from the 1980 and 2011 silver bull markets was social media. And today you have a much broader investor base than you did then. You could also argue on the other side that in 1980 it was a much smaller market. It was much easier to corner than it is today. Because now you have a much broader base trading the stuff, so it's much harder to corner it than what the Hunt brothers tried in 1980. But you do have this social media aspect of today's market. I mean, if you get on, I said that in my report, if you get onto Google Trends, the amount of searches going on for silver are suddenly through the roof. That's a broad-based participation that's going on, and there's broad interest. And if you just type in silver prices into YouTube, you're going to be bombarded with people who tell you that silver's going to $300 or gold's going to $10,000.
Yeah, it's just absolutely wild stuff. We could spend the rest of the show on silver, and trust me, we will come back to it, listeners, because it is inescapable. But let's break down some of the other action in these markets, such as it is. Since we were talking the dominant mover in the markets right now, let's start to the upside. Spoiler alert, number one this week is silver again, listeners, up over 23%. But let's run down the rest of the top five out there. Number five this week, back to dairy we go. A non-fat dry milk up nearly 8% this week, listeners. Number four, if you're tired of silver, how about palladium? Up 8.6% this week. Number three, the seemingly forgotten. It used to be the big dog in the metals complex. All anybody could talk about is silver now. This is gold. Up nearly 10% this week, 9.5%, and yet that's just an afterthought in these markets. Number two, OJ. So OJ was our most abused, beaten down contract of last year. Getting some back this week, up 10.5%. A little bit of weather action maybe driving some of that out there. And of course, the big dog this week, yet again, Brett, it's almost becoming rote. Another week where silver is up nearly 25%. It's kind of boring, Brett. What else you got for me? Any of these other upside movers catching your eye this week, sir?
I hate to say it, but honestly, no, because the moves in precious metals are just so extreme and things that we haven't seen for years that it's dominating the news. There's just no other commodity in the complex that's acting like it. I thought for a while that we were going to get a reprieve because honestly, it's getting boring. Uh, and we could look at energy, the crude oil would be reacting to what's going on in Iran and Ukraine, et cetera, et cetera, et cetera. But the issue with crude oil is you have oversupply, which is you have oversupply versus the geopolitical situation that kind of cancel each other out. So crude oil is sort of going sideways and has been going sideways in sort of a broadish band for a long time. So there's not much of a story there. I was hoping there would be, but there wasn't. Because when crude oil gets to the downside, it gets really exciting.
Yeah, we'll see if we have some action in crude coming up in a little bit. First to the downside we go, listeners. And for the week, we don't check in on the FX front or the dollar very often. We got the dollar index futures coming in. Again, shows you kind of a quiet week to the downside, off only 2.3%. Excuse me, for the number 5 spot this week. Number 4, keeping it in dairy, this time to butter. We're going to cash settled butter, number 4, off nearly 3% for the week. Pretty much tied with lumber coming in number 3, off almost 3% this week as well. So again, kind of a quiet week to the downside, especially when you're looking at the upside where you got silver up nearly 25%, gold up 10%. Nothing quite like that on the downside this week. Number 2, we're going out to lithium, off nearly 4% this week. And the big dog to the downside is cocoa, off about 6 2/3% on the week. Brett, any of these excite you? Are you really big on the dollar index futures or everyone's favorite cash settled butter, sir?
Well, there's two things. Yesterday, if you were reading, again, the impact of social media, yesterday, if you were reading the headlines or social media, you would have thought that the dollar was absolutely crashing. Today, it's recovered somewhat, but these were relatively, it wasn't crashing, it was coming off a little. And so the reports of the demise of the dollar are overestimated radically. And the other thing is cocoa. Cocoa and orange juice are interesting because they're the classic commodity cycle where they came up sharply in 24 and 25, made new all-time highs, but there was a lot of demand destruction that went on. The bottom line in orange juice is that people have a real hard time paying $6 retail for a half a gallon of orange juice. They're going to substitute it, they're not going to buy it. And similarly in cocoa, there was a lot of demand destruction and there was a lot of substitution that went on. Hence, demand went off. Rain started and the cocoa crop is much better than it was. So we have a fairly serious decline in cocoa. It probably in commodity circles, it probably would have gotten a lot more press had it not been overshadowed by the precious metals.
That is probably the case. Let's go see what's the case out there today, listeners, in our futures market. Is it an active day out there? It is, of course, Fed Day. We've been so obsessed with silver, we neglected to mention that. Fed Day usually is a tale of two halves. People kind of keeping their powder dry in the first half of the session to see what the Fed is going to do. Then the second half, we see the markets waking up. Is that the case today? Actually, no. The markets were fairly active in the first part of the session today as well. In fact, coming into the start of the show, we usually use that barometer of 300,000 contracts as our threshold for activity. Is it an active day? Is it not? Well, coming into the start of the show, we were already well north of that at 378,000 contracts. That gets you to the number 10 spot, which is NASDAQ. By the way, our top 10 is kind of all the usual suspects today. It's all equities and rates. If you want to go beyond that to find some commodities, you got to go all the way down to number 12 to find WTI at 312,000 contracts. Gold's not even in the top 15 of some of the other commodities we've talked about here on the show lately. So today, it's Fed Day. It's all rates and it's all equities. Again, number 10 listeners, it's the NASDAQ, 378,000 contracts. It's all March, by the way, as well, with the exception of one. You can probably guess which one that is now if you've been listening to the show recently. Number 9. To the 30-year we go. So all the way down the curve we go for number 9, 389,000 contracts there. Number 8, our lone December contract. It's 3 months over 413,000 contracts on the tape today. Number 7, To the ultra 10-year we go, 464,000 contracts. Number 6, it's the 2-year, 593,000 contracts. Now we jump into the top 5, and of course, a lot more equities lurking there. Number 5, it's the S&P 500 micro, 668,000 contracts. Number 4, it's the big dog S&P 785,000 contracts. Number 3, back to the rates, it's the 5-year, 883,000 contracts. Number 2, once again, this is the theme of this year. Last year, the 10-year was the undisputed leader in terms of volume. This year, it's been a bit of a fight. Number 2, the 10-year, 1.22 million. What can eclipse the 10-year? Of course, it's the NASDAQ 100 micro, 1.26 million. Now, of course, it's a micro, so size-wise, not quite the same beast, but from a pure volume perspective, it's the only thing that can even come close to sniffing the 10-year out there. Mr. Brett, we got so caught up in silver today, we neglected to talk about the Fed, which was also popping off today. Any thoughts about what we heard from the Fed and our top 10 most active rates and equities as a result, sir?
Honestly, no. What does surprise me, however, is that there's an issue lurking out there that no one is giving a lot of attention to, and that's the upcoming Supreme Court decision on tariffs. And that has been overshadowed by a lot of things. And it's been supposedly the court was going to announce their decision for a couple Wednesdays in a row now. And unlike most of it, I've been ready for it. And it hasn't been coming down. The court was fairly skeptical of the administration's arguments when they heard the case. I think it was about a year ago or 6 months ago. And that's going to be, in my opinion, if the court rules against the tariffs, although the administration says that they have a lot of other ways of instituting them, that's going to be a shock to the market because A, they're not talking about it, and B, it kind of upends, a signature part of the president's economic policies. And I don't know why the shutdown is getting more attention than that, but we could have a dual shock to the market in the next couple days, which could be really interesting. How does that tariff decision affect what we were talking about before, precious metals? I'm not totally sure what's going to go on, but it's a wild card that nobody is talking about.
It is totally a wild card. Last time the markets didn't care at all about the shutdown or vol. You would never have known looking at the markets or vol that the market was shut down for over a month. This time might be a different story. And of course, you're right. That lurking Supreme Court decision could come down out there at any moment, maybe upend the apple cart. Well, let's check out that apple cart, how it's shaping up so far for the year. Again, we kind of gave you the big dog already. The metals are the story for the year. In fact, if you look at our top 5 movers for the year, listeners, just get all long precious and go home. You're pretty much looking good so far this year. Number 5 for the year, gold up about 22%. Number 4, it's palladium up about 24%. Number 3, another P, precious, it's platinum up about 28.75%. Number 2, the lone non-precious metal on our upside movers list for the year so far, it's lithium. Not the most liquid of markets out there, so take that percent with a bit of a grain of salt, but nonetheless, a nearly 37% to the upside this year. And of course, the big dog, which is silver, up about 61%. It's these numbers, Brett, over 50% so far for silver just in less than a month. These are insane numbers, Brett. I don't know what else we could say for that, but anything else catching your eye? And are you a big lithium fan, sir?
I'm not a lithium fan. Lithium, I believe, is used is a psychotropic drug for some people. So I'm definitely not a lithium. But they use it in batteries and things like that. I haven't been following it because to me there was more interesting, and there's deeper things to trade where you don't have to go into some obscure ETF or something like that to get a hold of it. I should say that, backing up for 1 second, is one of the reasons silver is rallying is because traditionally silver has been a fairly niche market. I grew up in the NYMEX pits, and the COMEX pits were right next door. They were like about 50 feet away. gold was the thing, and silver was sort of like always sort of the wicked cousin. It was always a lot more volatile. Not that many people traded. It was kind of like a niche industrial commodity that you just didn't see. Gold bugs traded gold, and occasionally they traded silver if it got interesting. But I never have seen widespread participation in silver. Even, you know, I think I said on another show that I knew precious metals were going to go one way or the other when I walked into Costco and they had the right in the very beginning where they sell all the stuff that you're supposed to buy immediately. Uh, they had an advertisement that if you want the little gold bars that Costco sells, they had them in stock.
Yeah. I've seen that in my Costco as well. Right next to the food court, which is where you buy the $1.50 hot dog, they had a sign for $4,000 silver bars, I believe they were. So it was not at all an impulse buy, but they were right next to the hot dogs. I thought that was kind of funny out there. Yes, that is the world and the markets we're all living in here. Listen, let's run to the downside here really quick for the year because yes, there are some things that are red on the year. Hard to believe. Number 5, again, sugar off 1%. It's hard to even call that a year-to-date move. 1% is a bit of a rounding error these days. Number 4 to the downside, as Brett was alluding to earlier, a lot of headlines about the dollar right now. So far, not exactly playing out the way some folks anticipated. The dollar index off not even 2% so far year-to-date. In fact, keeping it in that sub 2% category, we got sugar off about 2%, corn off a little over 2%, and the big dog to the downside, cocoa getting a shellacking off over 30% year to date. So cocoa kind of the polar opposite of all things silver out there this week. Well, Mr. Brett, we had a fun journey through the world of futures. Before we get out of here, we talked a lot of silver. We talked a few other commodities. Is there anything else on your radar you want to hit on before we get out of here for this week, sir?
Not really. As I said, the energy complex is very interesting to me currently. I mean, especially some of the developments in natural gas have been extremely interesting because of the cold weather and crude oil. I mean, crude oil, where Iran has sort of left the headlines, or it's kind of in the headlines, but only partially so. But it's really possible that something could happen in Iran over the next couple of weeks or something like that, that could really be a shock to the crude oil market. Couple that with a tariff decision coming from the court, and you're going to have some real impetus for some really serious movements over there.
Yeah, it does seem like maybe we are potentially underplaying what is going on over there and the severity of what is going on over there in Iran. So another potential wild card to add into the mix, listeners, on top of the Supreme Court, on top of the potential shutdown and whatever other geopolitical brouhaha we come embroiled in the coming weeks and months out there, listeners. Well, that music means we've come to the end of this silver special here on the show today, listeners. I have a feeling it's not going to be the last time we talk about silver this year either. Just going out on a wild limb there, Mr. Brett. In the meantime, Brett, if folks want to check out your full report on silver as well as some of the other analysis you're doing, where should they go? What should they do?
They should go to OptionMetrics.com, which is where I get all of my data from. It's the best source of implied volatility data. Or OptionStrat.com, which is an options trading platform.
There you go. Check them out over there at OptionsMetrics or indeed OptionStrat.com. I encourage you, if you are intrigued by silver, check out this report. A lot of great visuals, a lot of great charts talking the implied vol, the percentage moves, the bubbles, all the fun stuff, even through some Google search trends data in there, Brett. So very thorough analysis. Check it out over there if you are at all interested in silver, and judging from your feedback, I know a lot of you are interested in silver right now. And of course, while you're checking things out online, check out our friends over there at Tasty Trade, tastytrade.com/podcast, a place to go to kick the tires and light the fires. They specifically asked for you folks on the futures rundown as well, so they got some stuff to offer on the futures side. Kick the tires and light the fires. See what they have for you. tastytrade.com/podcast. That's going to do it for us today on the futures rundown. Back again in about an hour to break down the entire Fed day in the options market. Was it a wild one? Well, we'll find out on the hot options report. And we're back again with all of our usual content until we're back again next Wednesday. Another episode of the Futures Rundown. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.